This is For Advisors by Advisors. I'm your host, Evan J. Mayer, and today we have a very special guest, actually the second time he's on the show, or maybe the third time he's on the show, and Mr. Anthony Ruffalo.
Cheers. How we doing today?
There's scotch in that mug.
You got a sound of, what do you got, like Baba Booey back there in the, even though that was a Howard Stern reference.
Or you got the, bam. All right.
Sound effects and everything. Wow, okay.
Yeah.
It's come a long way in a year.
Yeah, keeping it
Look
live.
at you.
Keeping it live, trying to keep the show moving.
Gotcha.
Anthony messaged me, and some of these are actually, they're not jokey questions. They're actually really good questions. They're thoughts that he was having on a night when he was having a scotch or two, and he said it would be a good idea to hop back on a podcast and talk about some of this stuff. So welcome to the show.
All right, well, I had, it was bourbon, not scotch.
Okay.
And yeah, I could have, I don't remember, so probably, yeah. And I'm like, oh, I messaged, I'm like, and then I was like, I'm an idiot. I should not have messaged him, because I had it at the time. I felt like I had all these great ideas of how I could help contribute to the podcast. And then I kind of hit this lull where I'm like, I'm an idiot. Like, what am I doing? Why am I telling this guy that I've got something for his podcast? He's done like 100 episodes that are fantastic. So I don't know. Let's see.
We haven't talked about some of this stuff though. So I think this is good. So let's hop into it. Let's see. What's the one I like?
Where do you want to start?
Do you and your wife disagree about money? That's a good one. Financial advisor, married, right? Do you guys disagree about money?
I think when I was typing some of these, my wife was actually yelling at me about something. So that may have been why it was stream of conscious.
I mean, I'll hop into it on my side. We'll go both sides. So,
well, I think here's why I bring it up is because it's kind of like therapists have problems, financial advisors have issues, and we're not perfect. We're not perfect people.
I don't think it has anything to do with being a financial advisor. I think what most of it has to do with is the history of the person. So I came from a family who at one time had money, and then my dad went bankrupt to like my junior year in high school, and literally went from like, oh, college is going to be paid for, to like, I'm scraping together 99 cents so I can go to Wendy's and get food off the 99-cent menu. Mm-hmm. My wife comes from a family who has means, financially is in good shape, and most likely, there'll be money down the road left for her. On my end, that's probably not going to happen. So the way I look at finances has always been a little bit more conservative, specifically our own. And while I handle all of the money management.
Wait a minute. So let me jump in right there, because I was just having this conversation with a young couple that was here yesterday, and then with Zach, as I'm training him. And I think we throw this word conservative around. And I think people don't even understand, like, let's define the word conservative. So conservative with your spending, conservative with your investments, conservative with respect to how you view volatility in the markets.
I think when somebody
conservative relative to what?
When somebody talks to me as an advisor, they're normally talking about asset allocation and investments. What I was specifically talking about is being conservative with our spending, because the way I look at it, the money we have is all the money we're going to have plus whatever we're able to save, right? So I don't look at like inheritance as something to like, we have that so we can be a little bit more, we can spend a little more. I look at it more like, if that shows up, cool, but right now that doesn't exist in how I'm kind of scoping our finances. And it's funny when you do financial planning with people, a lot of advisors don't ask about that. And what I find interesting is when we do like the preliminary and we data gather with clients, we don't ask them about that until the day of the planning session. And then when we go into the planning session, we go, I'm looking at the numbers, I go, maybe they're relying on inheritance. And half the time I'm right. And they're like, oh yeah, we are going to be getting this inheritance. It's going to be about $3 million. And you go, okay, well, that changes things a little bit. And so you start to look at the numbers different. With me and my wife, I manage the money. She manages the expenses. But at the end of the day,
manages to run up the expenses. Is that what you're saying?
She pays the bills, like all the bills that come through. I give her like a set amount, right? Like that I know she's going to need, and she's normally going to ask me for more than that. But I find it's my job for us to save, right? So I take a portion and I make sure that no matter what, I'm paying myself first. that's going there. Is the situation similar with you and your spouse?
So, or again, who you are and where you came from. So my wife is also is securities licensed. She worked for LPL for a decade. Very, smart, knows money. And we met kind of like later on. We were a little bit older, more established, 33, 34, got married at 35. So kind of we had to navigate that as we got married and then started blending finances. So at one point, yeah, I mean, I'm the CFP, I'm the financial planner. And I actually I enjoy doing it to some degree where I think she considers it more of like a tedious, I'm a spreadsheeter. She's not a spreadsheeter. So I just kind of naturally took over just handling that stuff. And what we do is we each have a personal account and then a joint account. And then the direct deposit goes into the joint account. And then she takes some out for kids and personal expenses. And I take some out for my personal stuff, which is just kind of set agreed upon amounts. And then all of our, household expenses and bills and everything gets paid out of the joint. Now, that
Very
doesn't
similar. Yeah.
that doesn't solve all of our issues, but I'm making sure that before it hits the grid, so to speak, the investments are allocated, IRAs and taxable accounts and insurance and all that stuff is all automated.
Yeah. Yeah. A lot of ours is, some is not, just because of cash flow for the business, and we're hiring and things along those lines. So
You hear that statistic, finances are the number one cause of divorce. And I don't buy it. It's not finances. Finances aren't the problem. It's like drinking isn't the problem. You're an alcoholic. Alcoholism is just a symptom of the disease. What finance is just a symptom of the inability for you to resolve conflict or mutually agree upon goals. And that's what I kind of work with, where I try and work with couples on goal setting and mutually agreeing upon through the financial. This is why I think financial planning is so important,
yeah.
because you're going to have disagreements, and it's okay to have disagreements. Disagreements are normal, but it's your ability to work together and resolve those disagreements that is what leads to success, and not just relationship success, but overall financial success. Because you have to have the relationship success before you can have the financial success.
I agree with you. I think that argument needs to be that it's not finances that cause a fight. It's financial fights that cause that that create that. And,
Really?
and,
Yeah,
and understanding where both, how does your spending affect the family, I think is a very important thing that both sides have to kind of agree on. Me and my wife, we're very healthy that way. We'll argue when she spends a little too much, and she'll tell me that I'm spending too much. So, but at the end of the day, we're aligned there. So, hey, one of the points you brought up, just switching topics, and I thought these two questions kind of go hand in hand. What do you do on days you're emotionally burnt? And what do you do proactively for your mental health as a financial advisor?
go.
You want me to go? Okay.
Yeah.
So I purposely get in the office pretty early, not as early as I used to when I first started in the business. So early nowadays is in the 8:30 range-ish. And when I get in, I work my ass off. And by 2:00, 2:30, I'm done. And it's pretty much why I do these podcasts at 2:30, because work is now out of the way. And now it's kind of becoming me time. This is the last of me time. It's like, but I'm no longer thinking numbers. And I always said the Wolf of Wall Street, when, Matt McConaughey's sitting there and he says, you have all these digits and they're kind of clicking throughout your head. It's
very acidic above the shoulders.
Yes. It's very brain draining. And I am beat to a pulp by the end of the day, emotionally, mentally. I mean, depending upon how many meetings, if I have 4 or 5 meetings, I'm pretty wiped out.
Well, let me ask you this. What do you find more mentally draining or taxing throughout your day? If you are working on planning and spreadsheets and actually you're in front of the computer all day, just problem solving for clients, or is it conducting 3 or 4 client facing meetings for an hour a clip? Which do you find to be more like at the end of your day, you get there and you're just like, oh man, I'm shot.
If it's existing clients, our meetings don't have too much planning. It more has to do with like little tweaks we'll make here or there to the plan or to their investment strategy, and more going over an update. So that's not that draining to me. What is draining is bringing on new prospects and new clients. When we're sitting there, I mean, part of our process is we do the plan with the client there, and that what I call planning day, which is basically not the first meeting, not the data gathering session, but the third meeting when we're actually inputting everything. I do that there with the client. And I know that's a lot of time, but to me, it's kind of getting to know the client and spending that quality time with them. That's the draining part, just making sure I get those numbers right. I get everything inputted properly the way it wants to. Uh,
Yeah.
for,
Smart.
for me, I picked up back in 2013. I picked up starting to do transcendental meditation. I actually did a podcast on it and wrote a paper on it. For me, that is huge. So I do 20 minutes in the morning, 20 minutes before I go home, and I have a beanbag chair in my office, and I have like shotgun headphones on. So like no matter what's going on in my office around me, I can't hear, and I meditate. And by the time I'm done with that 20 minutes, I grab my keys, my wallet, and I'm out the door. And I'm there and I'm present with my kids and my family. And before I did that, I was never present. Like I was there, but I was getting calls and I was thinking. So for me,
And 2013?
I started in 2013. It's been 10 years. Yeah. Yeah. So if you go to tm.org, there's local chapters everywhere. It's not a religion or a cult. You are given a mantra, and that mantra basically is just given to you in the concept that it doesn't have any meaning, so that when you're sitting there, you're not listening to music. You're not
with the whole point just being trying to be devoid of thought, right?
You ever been at like a pool party or a bunch of people are drinking, everybody's hanging out, and you kind of go underneath the water for a second and it's just quiet?
Yeah.
That's what it is.
Yeah, I would imagine that's how my clients feel when they're in a financial planning meeting with me. They just kind of zone out. I'm like, oh, you're doing your TM. Okay, I got it.
Yeah. So that's the time. What do you do though? What, Anthony, you got to do something.
So I have had, I know that is on my, like, that's one of the things that I know I hear people speak about that I know works wonders. And for some reason, I just don't, I'm more of I'm a workout guy where I've got a pretty nice little setup in my garage, kind of like CrossFit-ish type of stuff. I feel it's a night and day difference when I am consistently working out and when I'm not. And I start to get into a bad, like I just get short. I just kind of get snappy. I'm not my best self when I'm not hitting. And for me, it's like just lifting heavy weights, like Olympic style kind of, it just does something for my body, the way that I'm built. If I can do that 2-3 days a week, I'm good. And then I love mountain biking. So I get on my bike, and right off my neighborhood is a trailhead where there's about 10, 15 miles of trails. So if I can get out either between lifting, and then that's kind of like my cardio. If I can get 3-4 good workouts in, I'm good. And then, and
Those
I
endorphins
also,
are pumping.
what's up?
Those endorphins are pumping.
Yeah, absolutely. And I find with riding, I'm not a runner. I wish I was. I'm just not. I'm just not built for. I'm 5'7", 205 pounds. I'm just not built to run.
I mean, I think of a guy in Kenya and you like side by side in a long distance race. It seems pretty accurate. So, should we have an industry standard?
Oh, let me give you one other thing too that I just learned the other day. So everyone's heard of Brene Brown.
I don't think I have.
No, all right. So she's a huge like women's like ask any woman about Brene Brown and they'll be like, yeah, I know Brene Brown. Motivational speaker, women's empowerment, and she's like in the Oprah kind of
got it.
Great. She's fantastic. I love her stuff. And one of the things that she said was, as a couple, to navigate conflict in your marriage, she said, marriage is, we think it's a partnership, but it's not, because nobody ever has 50-50 on the same day. She's like, a lot of days it's 70-30, or sometimes it's 90-10, or Or sometimes you guys are, or you're both clicking along together, but it's rarely you're giving exactly 50-50 on this at the same day. So she said, which is a great exercise I immediately started doing last week with my wife, is when I come home, we kind of check in and I'm like, hey, I had a day. I'm at like a 20 right now. Where are you at? She's like, oh, she's at least she's above a 60, a 50. She can pick up the slack with the kids, or and vice versa. Where are you at? Oh, I'm at a 10, or I'm having just a day. And I'm like, oh, I had a good day at work. I'm okay. I'm good. We can pick up the slack. And that's been really working. I find that very helpful. But the key is when I come home and I'm at a 20 and she's at a 20, it's how are we gonna give each other grace to navigate those days when both of us just don't have it?
Good.
And
I think I worry though. I would come home at a 20 a lot, and my wife would be like, "Hey, Evan, you can't say you're a 20 every day."
well, it's like anything else, it's awareness, right?
Yeah.
It's awareness. All change starts with awareness.
So let's hop on that question because this is interesting. Should we have an industry standard? Now, there is an industry standard out there now.
Not really.
It's a bullshit industry standard, but there is an industry standard. I think you need to be doing a lot more than what the industry standard is. What are your thoughts on
Well,
this?
well, what is it? What are you saying?
We have industry standards when it comes to manage money, right? You got to meet the client once a year. You have to update their risk tolerance. You have to update their information, their assets, their situation. So I think there's a CFP industry standard, right? Which is all those 12 steps of. I hope I don't get my license taken away because I don't know the exact 12 steps, but all the
I
steps
was just
you should
I
know
would
anyway.
yeah, so I guess what I meant is, yeah, there's the CFP board. They have the industry standard, the practice standards.
Yep.
You have your practice standards, and then you have your process that you have to follow if you're operating when you're a CFP, you're operating as a fiduciary in a fiduciary capacity. Here's the process, which is, to me, it makes sense. Like, it's like, duh, everybody should be doing this process,
Yep.
because it's just not only is it the right thing to do, but it's like, well, how can you give advice without doing that? You just can't. If I don't know, if I only know 10% of your situation, how can I give you 100% of the advice that you need? Because and the more that you understand about this business, the more you understand how interconnected everything is, and how it's all, like, every decision affects everything. So I can't give you complete advice without knowing everything.
So this goes down to rules and regulations. And the problem with rules and regulations is the people that don't want to play by the rules and regulations are not going to. And they will find ways to not. I remember when I was at SunTrust and I was in the bank channel and I was not on the independent platform, we had these leaderboards, and to get your compensation and deferred comp, you had to hit these certain buckets. And the buckets were, you had to do this many X plans for clients, you had to do this, you had to do that. And they were buttons that had to get pressed. And I never lived by that. I always lived by, like, I call it practice standards, which is my practice standard is I have to be able to do a financial plan for every client. And I know people go, well, some clients don't need planning. No, everybody needs some sort of planning, or at least as the advisor, you need to understand what they already have in place. If they already have planning, fine. Then I at least need to see it, and I at least need to understand it before I invest money for clients or advise them.
Yeah.
But I think the problem with an industry standard is there's a lot of bad actors in our business. It's known. I mean, look, have you ever gotten a call and been like, are you a broker? I mean, like, you get that call, you want to grab the person on the other side of the phone and say, broker, this is not 1987. But there are still brokers and there are still insurance sales guys. Like you talk about at, what's that show you do, the Mass Mutual show?
Truthful Mutual.
Truthful Mutual. It's, how do you, whatever standards you put down, they're just going to click the buttons. And I don't think an industry standard ever could take place that is truly beneficial to the client unless you mandate full comprehensive financial planning and you have to submit that up to some board and be monitored. It's
Yeah.
you
Well,
know what I mean?
Well, here's what what I'm dry. I guess for context, I think anybody who's listening to this podcast is going to know. I mean, I came from the Equitable, AXA, Equitable.
Yep.
And for them, it was specifically a 403B annuity. That's what I was hired to sell. And that was it. Irrespective of you figured out how it was suitable for the client. And then they had other divisions of it where it was just about life insurance. And there's really no discussion about anything else. They're like, oh, you have an income and you have a family. Of course you need life insurance, which is true to a degree, but it's not completely true. And there's so much more, I believe, just good that you could do there, rather than just checking a box and trying to sell 42 policies to hit your bonus and get your premiums and get on the leaderboard and that stuff. So yeah, no, you can't. I'm not suggesting that we legislate it, because it's impossible. It's impossible to legislate everything. But I worry about, or I just think about, even on LinkedIn, where you've got people touting, like, everyone's talking about financial planning, which is great. It's a good step in the right direction. But then, as well as I do, it's like, well, what does that mean? What are you doing? Like, who's to say my assumptions are better than Evan's assumptions? Because a lot of it is based on hypotheticals, and where that comes from is your experience in the industry and your background on what you believe is reasonable expectations, what a client should expect, and then how you build your plan. Just like the insurance people would illustrate 12, 14, 18% returns, it's ridiculous. Well, you're creating assumptions on Social Security and inflation and income taxes and investment return. Like, there's so much that goes into that's what I mean by standards.
LinkedIn's kind of funny to me too, because everybody has these track of minds that they stick to. Like, specifically the RIA guys, they look at registered people and they go, well, you're not really independent and you're not really acting as a fiduciary unless you're purely an RIA. And I love to push back on that, because how you're compensated does matter. I think it does matter, but there's always a right product for somebody. I never think there's a bad product. Like, I don't do a ton of annuities, but if you have a 1035 exchange situation with a client that's in a very high tax bracket that's going to be in a lower tax bracket later, and you have a better solution to put them into, that's a great thing. I don't think there's anything wrong with that. I don't think there's anything wrong with any product out there. And I think the problem in today's day and age is that, specifically on LinkedIn, is there's a lot, from what I see, and I don't do any endorsement of anything on my LinkedIn. I share videos that I send out to clients just to have out there, but I don't really put anything else out there. But I do watch, like, people with their ideas, and their ideas are sometimes so strong, like, this is the only way. And I want to I want to go across the LinkedIn platform and be like, no, you're not looking at it. You're not looking at it objectively.
I have a problem. So one of the things so I'm on the LPL's corporate RIA. I'm not on my own RIA.
Yep.
And I do that purposely. It could be, but I don't, because I don't know, call me crazy, but a fiduciary, if you have a responsibility to act in somebody's best interest, but then there are certain solutions that you're unable to provide people, well, how are you acting as a fiduciary? Like, I get it. And I don't think there's like a right way to, I see that how regulating the commission stuff is a step in the right direction, because it's been abused in the past. But if you can't offer somebody a fixed annuity or an indexed annuity, or like, you get those people who, some people are just risk averse, or a structured product. If you don't have the ability to offer that product because it's not available on your platform, or you're just little old fee-based Chucky who started his own productless RIA, and he's registered directly with the state, and you don't even know what a structured note is, and you don't even know what an annuity really is, other than what you read in a textbook to pass a test, You've never worked with them. You've never had any formal training on them. How can you tell me that you truly can are in the position to tell somebody that this is or is not in your best interest if you don't even have any working knowledge of those products? That's my thing. And it's a very gray, muddy, murky area, but I just feel like if I have more options for people, that's a good thing.
It is, and it's funny. I'm sure when you worked in the insurance end of things, you had advisors that were doing specific things and other advisors that were using specific products, and like those products fit every solution. And unfortunately there's a lot of those out there. I want to go a couple other spots here that you hit. This was a funny question. Do you ever struggle with feeling guilty about making too much money? What did you mean by that?
Well, the imposter syndrome thing comes up, right? And it goes back to am I worth what I'm making, especially getting older in this business? And all that work that I put in on the front end, it's compounding, which when I wasn't getting paid, but you tend to forget about all of that unpaid work that you did in the beginning, and it compounds and grows. And then you also have market growth on your, so the numbers start to get pretty sizable for a disproportionate amount of work.
I've had days where I feel that way. Now, imposter syndrome, I have a lot of. I think that happens with every advisor. Like, should I be in this position? Should I have this?
Now, my answer is no, I don't, but that's just me.
But I work my ass off. And I think if you're an advisor and you make a lot of money and you're wondering if you feel guilty, you might need to work harder. Because if you come in and you feel the way I do at 3 p.m. and you're working with people's finances similar to a doctor going through surgery, I think if you put yourself into that mindset, then you're worth every dollar. Because what's more important than health? Health's more important, but what's second? Money, right? And I think if we as advisors look at how hard we put in and what we do. Now, you have to question, and I'm not going to name names, but there was an advisor I was talking to a month ago, and he was charging very high fees. And I said to him, hey, your fee structure is kind of high. And he goes, isn't that great? And I go, what do you do for clients? He goes, I do a risk assessment, and then I choose what kind of UMA to put them into and which model that the firm has. And then I move on. And I say, I would have imposter syndrome a lot. Like that I couldn't do. Like, and the questions of what you're doing to earn your fee, I think is an important thing you have to ask yourself. And if you are having that problem of making too much money, and yeah, I agree with you. There are times where I look around me and like, I go, I have everything I want in life. Like there's nothing really I need, but no, just work harder.
Yeah.
You'll get over that.
Well, yeah, I think it's important to really, every year I try and I bring clients more value with adding tax planning or adding something else to constantly. I always feel like I'm going to get fired. So I always feel like I need to be bringing some more value to the table, especially as the investment piece to some degree does get commoditized. And I always want people to feel like they're underpaying. I always want people to feel like that's how you get referral. The only reason you get referrals is because people feel like they're getting the better of the deal.
100%. They're getting the value.
That's what the value is. Like, I feel like I'm winning.
Yeah.
When I do business with other people, when I feel like, oh wow, I got more than my money's worth, that's when I send people business.
And I think what you just said is the number one key to success in this business is to always be humble and always feel like you could potentially lose the client, and you always got to come up with something new. I think everything you just said there, it fully correlates with me, because I do have that fear. I
always feel like I'm going to get fired.
Yeah. But the greatest thing is when the client says to you at the end of the meeting, like, Evan, I wouldn't be anywhere near where I am today if it wasn't for you. And when you hear that and you go, okay, no, that brings you back to, okay, I should be more confident. But I think not being that confident is key.